Welcome back. Let's connect with Gautam Duggad now, Head of Research Institutional Equities at Motilal Oswal Financial Services. Gautam, good morning. Good to have you here. Appreciate your time as always. Time to take stock of earnings. And what are your full year FY25 numbers moving based off what you've seen for the last quarter?
Hi, Prashant. Good morning. Thanks for having me. So as of yesterday, if you look at the earnings season in totality for the fourth quarter, about 201 companies in our coverage and 41 Nifty companies have declared their results. The numbers have been better than expectations. We had a very modest expectations going into the quarter. So for our set of 201 companies, the earnings growth is about 9% versus expectation of 4%. This is also a drag from OMCs. If you keep aside those three OMCs, the rest of the 198 companies that you look at on a YOY basis, the earnings growth is about 14%, which is almost double of what we were expecting, about 7% growth. And for Nifty, the earnings growth is about 13%, which is far better than our expectation of about 5%. As far as forward revisions are concerned, Prashant, the upgrade downgrade ratio, as we call it, for companies which have seen a plus minus 3% or more than 3% kind of a revision, the upgrade downgrade ratio is almost same. 48 companies have seen an upgrade of 3% plus, and about 52 companies have seen a downgrade of more than 3% for FY25. As regards forward EPS estimates, as far as FY24 itself is concerned, we have seen an upgrade of 2%. So when we went into the preview, we had an expectation of about 976 rupees for FY24. As we are about to now close the earnings season for FY24, we are reaching 995. This works out to about 23% earnings growth versus a delivered EPS of about 810 rupees. And for the next 2 years, for Nifty FY25 and FY26, our estimates are stable around 1130 and 1320 rupees, which is a growth of 14% for FY25 and about 16% for FY26. So CAGR of 15% on a base of a 23% delivered growth this year. So net earnings season has been quite stable, and more importantly, the spread of earnings have been fairly strong. I mean, within the sectors that we cover, barring specialty chemicals, all other sectors have either beaten expectations or have met expectations. So both in terms of aggregate performance as well as the spread of the earnings, the season has been pretty solid.
Okay. Gautam, hi, good morning. I wanted to talk about some themes, right, that have worked very well in this earnings season for a while, actually. One of them is this Indian companies manufacturing for the globe. So, for example, we were talking about Dixon Technology, right, and how they've now supplied to some of the largest mobile companies in the world, very good numbers this time. We're also looking at some of the defense companies that are doing very well. BEL, for example, this morning is up 7%. From here on, which are the companies where you think could give you maximum potential based on this theme?
I think, Sonia, some of these themes that you spoke about rightly, they are a multi-year theme. It's not as if they started performing well recently. They've been doing well for the last 2-3 years. And if there is a policy continuity after this election, the results of which are going to be declared 2 weeks from now, then I think there will be far more traction in the same set of themes which have been working, which is industrials, infrastructure, manufacturing, PLI-based themes. So I think the tilt of the market, which shifted post-COVID towards domestic cyclicals and some of the forgotten sectors from 2010 to 20, they've come back roaringly in the last 3-4 years. I think that theme can continue. You can add few more sectors to that, themes like real estate, discretionary, even auto, for example. Auto once again has been the best performing sector in this quarter and has beaten expectation. Spread of the earnings has been fairly strong too. You spoke about Bharat Electronics, a stock that we just upgraded yesterday. Solid set of numbers, earnings upgrade of more than 20%, and the visibility on order book is fairly strong. So, whether it is defense or capital goods or infrastructure, real estate, these are the themes which have been doing well for a fairly long period of time. And we do expect them to continue to do well in the forthcoming few years, assuming there is a policy continuity.
Gautam, let's just assume for a bit that we're at about 22,500, right? Pretty close to the previous all-time high, around 22,800 or so. And we get there by in the next 2 weeks, right? And numbers come and there's continuity. around the last year's number. What are you expecting a big move? What are you hearing, and just some feedback once that comes? Or you think it'll be business as usual? You think there has to be some readjustment, a one-time kind of 1 day, 2 day thing, or not really?
So Prashant, these are very difficult things to predict, but you go back 2 weeks, when there was some nervousness which was creeping in around, political certainty. But after phase 4 and phase 5, again, there is a sense of calm and stability. And some of the famous physiologists have already sort of given a hint as to what is going to unfold on 4th of June. So market has been having a sigh of relief of late last 4-5 days. If you see the action in small cap index, if you see the action in some of the PSU companies. So I think we are not going into the election with a lot of rally behind in the last one odd month. We're going around in that same 22,000, 22,500 band. Now, depending upon the results, depending upon the outcome and the margin of victory, market will have a few days of reactions. But beyond 2-3 days, if the election is in line with expectation, the outcome is in line with expectation, I think market will then again go back to fundamentals. Then people will start anticipating the big announcements that Prime Minister has promised in his first 100 days of tenure, potential budget-related changes or announcements. As far as fundamentals are concerned, as I said, we have closed the year with a good 22-23% earnings growth, and the projections are 15% CAGR for next 2 years. So today you're trading at about 20 times 1 year forward EPS of 11.28. You assume that 8-9 months later, if you were to traverse a similar journey and trade at 20 times 1 year forward again, that point of time you will be discounting FY26 EPS of 1330. If the 20 PE multiple sustains, mathematically you are talking about a range of 26,000, right? Assuming there are no big changes in the earnings estimate along the way, and we don't get any surprise on 4th of June. So there is a range which is well established for more than 2 years now. Market has been largely, as far as Nifty is concerned, very nicely trading around 20 times 1 year forward.
One more theme that has come back in a big way is the return of rural demand, right? Whether it's most corporates that have an exposure, whether it's Hero MotoCorp, Colgate, Dabur, HUL, all of them spoke about green shoots of recovery in rural demand. To play this theme in FY25, what are the top stocks that you'd look at?
Yeah, Sonia, so this rural revival is coming back into reckoning and narrative after almost 2.5 years of a rural slowdown. Last year, we've had a very bad monsoon. This year, IMD and SkyMed both have projected that the monsoon is going to be normal. On top of that, some of the bellwether companies in consumer and auto, which has a slightly larger, salience of rural, they've spoken about some some early signs of green shoot. So if that transpires, then I think there is a decent room for an upside in some of the heavyweight in consumer and auto sector. Obviously, consumer has been underperforming for more than 2-3 years now. Stocks like Hindustan Lever have been flat for 4.5 years now. From February 20 till today, the price is more or less in the same range. So possibly, if there are some earnings upgrade along the way, that will help. Plus, inflation has been in a control now. Commodity prices have been in range. So all of this put together gives you a decent backdrop for some rally in a consumer sector, which are predominantly rural-facing themes. So there you might expect some sort of a rebound. Auto has done very well. You've already seen M&M, which is part of our model portfolio, hitting a new high after posting a very good set of numbers with a very good sort of a commentary for next year. So I think some of these stocks have already rallied, but given that they're coming on a 4 years of underperformance, it will not be far-fetched to expect that there can be some more rally in those names. And do remember that last 3-4 years has all been about domestic cyclicals and Capex side of the cycle, wherein consumer stocks got left behind, especially staples, because discretionary has done well, which is where we still have a big overweight compared to staples. We are still underweight on staples. But yeah, I mean, tactically over the next 6 months, if monsoon, which is about to arrive in next 2 weeks, if it is normal, then possibly you will see a good sort of a rebound in some of these names.
All right, Gautam, we'll leave it there. Thank you very much, and good conversation as always. So, FY24 earnings, Nifty earnings have moved up a little bit. 25 earnings, you're pegging at 1130, and 1320 for FY26. So, decent sort of earnings growth estimates for the next 2 years lined up as well. So, that's Gautam Duggad of Motilal Oswal Financial Services. Market